Hi, welcome to 2016. I thought I'd give you my few key points that I think are going to be paramount to what happens in our markets through the course of this year. The first one being consumer confidence. Obviously, consumer spending and their confidence depends on how much they choose to spend or not spend. And the key to consumer confidence, in my opinion, is probably unemployment and what happens with that. It looks like it's pretty steady at the moment, but I'm going to probably keep mentioning that state-based factors are really the key here. With the state-based economic factors, with the mining industry coming off in Queensland and WA, they're probably going to be a little bit more affected than maybe the other southern states or eastern seaboard states in New South Wales and Victoria. They appear to be pretty strong and growing. That obviously then has an effect on business confidence. So I think business confidence will remain pretty steady this year. It appears that businesses are still spending. It appears that they will continue to spend and invest. There were some good tax breaks announced in the middle of last year in the budget. So business confidence appears steady. It tends to go up and down a little bit monthly, but as a rule, it appears pretty steady. The next thing that probably is important is inflation. Inflation still sits within the Reserve Bank's band of between 2 and 3%. It's been steady there for some time now, and I think all expectations are that with a number of those state-based economic factors that will remain within their desired band. Obviously the good thing with that is that has a knock-on to our interest rates and things like that. But let me come back to interest rates, because everyone's talking about the property markets and what might happen there. I believe that 2016 will still be a pretty good year for the Melbourne and Sydney investor markets and property markets as a whole. I don't think we're going to have the high of highs that we've had in the last 2 or 3 years, where we've seen quite dramatic growth in those markets, but I do believe we'll continue to still have a reasonable year with property growth. The housing markets are quite strong, and with interest rates low and again the confidence and things like that still being pretty good, I believe that they will continue to grow. In other markets, I think with those state-based economic factors, I think Perth is going to have some issues through the course of this year. There's been a massive amount of infrastructure and new buildings done in Perth. Based on then the decline in the mining market, I think they might face some issues. I think Brisbane and the wider Queensland market are going to face some issues with the mining contraction. And then the other markets will all have those state-based. So in South Australia, with the car industry starting to wind down, is going to potentially have some issues there. So what's going to happen with interest rates? Interest rates, I believe, for 2016 will remain on hold. If anything, the risk is downside. I think potentially we might get a 0.25%, even a 0.5%, but I really don't see the need for that. We're really at emergency levels now, so I think keeping interest rates on hold for 2016, and to be honest, probably the majority of 2017 will continue as well. If anything, by later 2017, hopefully our markets and economy is in a better state, and we'll potentially start to see some rate rises. If anything, the real activity and action around interest rates is going to all be to do with what the bank's incentives are being. So banks put up interest rates late last year. We're now starting to see a little bit of competitive activity come back in and some real enticements to try and get lenders and borrowers back into their doors. That's what I believe will happen for 2016. I hope it's a good one for you.